think broadly there are three broad objectives of changes to the Banking Act. The MAS has described it as formalizing the bank's duties to inform MAS of material adverse developments and information, whether relating to the bank itself, its shareholders and controllers, or key appointment holders. So that's one. Second, to strengthen MAS's control over the bank's key appointment holders and auditors. And third, to formalize the bank's duties to implement adequate risk management systems and controls. So these are now formalized as being part of the main act itself. There's quite a whole slew of proposals. So some of the key ones include a duty to inform the MAS of material developments. So that's now codified in the Act. And the scope would extend to material adverse developments relating to the bank itself, whether including head office or the branches, any entity within the group, whether in Singapore or elsewhere. And in terms of the scope of material adverse developments, it could be in relation to the breach of any laws or regulations, any breach of business rules, codes of conduct. It includes investigations, even if it's not yet convicted. There is a requirement that it only applies if the bank is in fact aware of this development. Now this could pose practical difficulties for banks because for MNC banks, the net could be cast very, very widely. So the MAS has listened to some of the feedback that was given and said that for the banks which are incorporated outside of Singapore and for which MAS is not a consolidated supervisor, the MAS will only require that they report to the bank, report to the MAS, if the bank has reasonable grounds to believe that the adverse information or development is likely to materially and adversely affect the branch in Singapore. So there's an element of materiality which mitigates the requirement somewhat, but obviously there are still various shades of grey in relation to what is material or not. And practically you still need to put in a process where to ensure that any breach, and remember a breach could also relate to an investigation that is yet to be complete, gets communicated down to a bank in Singapore. So there's still quite a big material impact on banks in Singapore. The other broad proposal relates to fit and proper issues for key appointment holders. Essentially, what used to be in non-legal form in terms of fit and proper standards is now going to be codified and have got a strong force of law, and that they have to be complied with on an ongoing basis. So one of the proposals relate to banks being required to inform the MAS if there are fit and proper issues for key appointment holders. And who are they? They are the directors, the CEO, the deputy CEO, CFO, and the chief risk officers. The benchmark would be against the fit and proper guidelines, which are already in existence. And these largely touch on issues of honesty, integrity, reputation, competence and capability, and financial soundness. And then moving on, the other proposal relates to substantial shareholders and controllers, where the bank needs to notify the MAS as soon as they become aware, one, of any person who becomes a substantial shareholder in the bank, or the controller without the pre-approval of the minister, which is required. So that needs to be done. The banks also needs to notify the MAS if they are aware of any material information which negatively affects the suitability of the substantial shareholder or the controller. But this only applies to banks incorporated in Singapore, not to banks which are, branches of overseas head offices. So that also widens the net for the MAS in terms of getting the banks to ensure that they are aware of any new substantial shareholder or controller. That will be the net effect of this proposal. The proposal goes on. Another one talks about MAS's control over key officers or auditors of the bank. The proposal essentially replaces the existing grounds for removal of the directors and executive officers with ceasing to be fit and proper, and also to include a concept of interests of Singapore's financial system as an additional grounds for removal, of key officers of the bank. So that's just yet another proposal. There are current grounds under the Banking Act which allows these officers to be removed if they willfully contravene the Banking Act, or they fail to secure compliance with the Banking Act, or they fail to discharge their duties. But these new grounds widens the scope of possibilities where these executive officers could be removed from the bank.